Ladies and gentlemen, welcome to our fireside chat, the session you've been waiting for. The 2020 Task Convention is underway, and we've heard from professionals from different sectors and different regions from all over the world. We are excited and we are happy that you tuned in today. My name is Seth Chengo. I'm an actuary with Zamara, and I assist with setting up businesses for Zamara across the African regions. We're in 5 countries now, and that is my day-to-day job. I'm also a member of the Council of the Actuarial Society of Kenya. But today, I'll be handling this interview in my capacity as an actuary in Kenya. And indeed in the region, because we have actuaries logging in from all over the world. 2020, what can I say about 2020? It has been an interesting year. We've had highs, we've had lows. The election in the US has just ended. The election in Tanzania has also ended. We've had highs and lows. We've had very interesting times across different sectors. We've had industries that have really struggled during this pandemic season. Talk about the hotel industry, the transport industry, amongst others. But at the same time, we've had industries that have done exceptionally well. Tech companies have doubled or tripled in valuation, amongst many other examples. The purpose of our session today is to talk to the industry experts in insurance, people who have been here for a very long time, have seen very many seasons come and go, and we're keen to understand how has the insurance industry fared in this difficult and trying 2020. Yesterday, we were talking about the VUCA world. How has the insurance industry in Kenya, and indeed in the region, fared against the pandemic? But more importantly, how will this insurance industry face the future even after the pandemic is done? Once again, welcome to the session. I am really proud and privileged to have 2 very experienced professionals in the insurance sector. Allow me to introduce them very briefly. On your left, you have Mr. Sammy Muthui. Mr. Sammy Muthui is the MD of Minet Kenya. And on your right, you have Dr. Patrick Gatonga. Dr. Patrick Gatonga is the CEO of Jubilee Health Insurance. Gentlemen, welcome. We will go straight into the conversation because I know our audience is struggling, is looking forward to this particular conversation. So I'll begin with Mr. Sammy Muthui. Allow me to call you Sammy.
Yes,
the
please.
First question, did we as an industry see this coming? We have risk managers, we have risk professionals, we have people who model in the insurance industry. Did we see the pandemic in 2020 coming?
Well, first of all, Seth, thank you very much for the introduction and for inviting us to participate in this conversation. It's a great honor for myself and for my company. I would say that by and large, we did not see this coming. In my universe, I've only come across one client and one reinsurer who actually had started modeling, or who had come up with a model for management of a pandemic like this. So I would say by and large, no, we were not prepared for this.
Okay. Specifically I know that you run a very profitable and very large business, Sammy. And whereas we're talking broadly about the insurance spectrum, as people who play in the distribution space, did we foresee a situation where we'd be dealing with a pandemic or changing our business models to deal with a case where one-on-one interactions would be a challenge?
I think in a sense, when you look at especially our risk management practice, where we advise clients and businesses about business continuity, because this is truly speaking a business continuity conversation and also a risk management conversation. Most of the models and risk maps that were drawn up did foresee mostly physical separation from working from the office, say for example from a fire or from from a terrorist attack or from something that affects your physical ability to be there in the office. But and it is based on those BCP or business continuity plans and risk management plans that would take care of such a contingency that now dovetailed into being used for management of the pandemic. But to the extent that we were fearing people coming to the office because or people are unable to come to the office because of cessation of movement or because of being vulnerable to the disease, we found ourselves in very strange territory in the sense that yes, the office is still there, but it's not accessible. So to an extent, it was a bit easier if you had a good business continuity plan, but you'll realize that many business continuity plans were such that you had an off-site disaster recovery, contingency plan, of which you would be able to access your IT facilities and your business tools from an off-site disaster recovery plan. But this time we are accessing from our main offices, and to a large extent that was a bit easier. So I'd say whereas many businesses that had business continuity plans had not specifically planned for a pandemic, those BCP plans by and large came through for those businesses with regards to management of the work from home scenarios, and never mind also the health and safety plans which are mandated by government. Also, those committees, and for those who had set them up well, managed to see a good business continuity or continuity of their business because of those particular plans. The problem is that a good number of businesses out there don't have well-established BCP plans, don't have well-established health and safety protocols. So those are the ones that struggled quite a lot. But by and large, the ones in the formal sector came through pretty well.
Very good response, Sammy. And later on in our conversation, I'll be coming back, to better understand, your career progression and giving specific advice to the audience, which is mainly our actuarial professionals. But right now, allow me to move to Dr. Patrick Gatonga. Allow me to call you Patrick for today. How has the industry performed against this pandemic? And specifically, you could talk about the insurance industry in general, or you could focus on the medical insurance sector where you lead a very large and profitable business. How has the insurance sector performed against the 2020 pandemic?
So thanks very much, Seth, for having me in the conversation, and as well for inviting Jubilee to be part of this conversation. It's a real privilege to be part of this and, be part of the conversation that's happening amongst actuaries on this issue and how we see the future. So to your question in terms of what we've seen and the kind of impact we've seen this pandemic have on our industry, I would say the picture has been by and large mixed. The impact across different classes of business has been varied. In the industry in which heavily involved, or the sector in which I'm more heavily involved, which is the healthcare space, we have a changing picture from how we began in around March or April of this year. Initially, there was a lot of anxiety around what would happen from a risk management perspective, especially issues relating to clients. We saw a lot of anxiety in terms of, to what extent would the risks relating to COVID be covered, And that became a huge issue of conversation that also required the regulator to be part of the discussion, and the government in that case. But by and large, we've also seen a lot of data emerge from that I think more and more is informing us what we can do going into the future and how we can manage the whole aspect of the pandemic. So we've seen overall most health insurance companies or health insurance divisions do relatively better than had been anticipated or had been forecast. I think for two main reasons. One is that the businesses heavily rely from a growth perspective on corporate businesses, and a number of corporates had relatively well laid out continuity plans. As much as there has been some impact in terms of shrinkage in some areas, I think by and large, a lot of institutions have managed to survive, at least so far, the first phase of the pandemic. When you look at it also from a claims perspective, health insurance companies have also benefited in a way, in the sense that a lot of claims that would otherwise be associated with the non-communicable illnesses, or communicable illnesses, which really are the bulk of what we spend our claims on. We saw a drastic fall in that, relating to different reasons. And I mean, there is different reasons we could give, but I think part of that was also the fear of people going to hospitals and wanting to stay away from transmission or high-risk transmission centers. But at the same time, also, I personally think the huge push around hygiene across the country has also helped manage a lot of the communicable illnesses that would have otherwise seen throughout the year. So on the health side, by and large, positive. Although we still need to see how or monitor how the picture evolves in future, particularly in relation to how our clients survive the pandemic. On the general insurance side, I think it's been moderate in terms of impact. A huge part of it is because of, it's an industry that's driven mainly by corporate clients as well as motor, as you know, motor vehicle insurance, which has continued to be mandatory. We've seen a lot of downgrades from, for example, comprehensive covers to more affordable options like third-party insurance. So as much as there has been some shrinkage, not as it's been significant, but I think it could have been way worse. On the corporate side, again, a lot of the institutions have continued to require the kind of covers they were having before. So you've also seen, sustenance in terms of some of the other risks that were driving the market. That said, I think the growth would have been significantly more than what it is. I think the industry that has been most impacted is the life industry, mainly because it relies heavily on disposable income. When you think about individual life insurance policies, issues of the pension sector as well, we've seen a significant amount of withdrawals over the last few months, and that continues to be the case. So in order of progression, I would say the life business has been the worst hit by this pandemic. But I think all of us are in a space where we sort of have to rethink our business models and see how we can, in the immediate term, survive, but also start thinking around how to thrive in the future.
Very, very, very good response right there. And, you've talked about how the insurance industry has had varied responses depending on whether it was life, general, and medical. But coming back to medical, the experience, as you've explained it, is actually consistent with what we have seen and heard from other jurisdictions across the world. Yeah, so very interesting results. I'd like to move on to something that's a bit controversial. The second wave, as they call it. What are your views about the second wave? And do you think the industry is ready for a second wave? And even wider than the industry, do you believe that our countries and our regions are actually ready and prepared for a potential second wave of this pandemic? Sammy, maybe you can begin on that one.
Okay. All right. Thanks again. Maybe, first of all, let me say that Dr. Gatonga's analysis was pretty good, just as you mentioned. But probably just to add one or two things around that before I talk about the second wave, which will inform the answer to that second wave issue. when we look at our economy right now, we are projected to grow 1 to 2%. When initially we were thinking we were going to negative territory. Next year, I think everything held constant, we are expecting in the neighborhood of 3% growth, and that's not factoring in the possibility of the vaccine coming out as we had from Pfizer today. And then the other truism that we are seeing is if you look at the industry performance using the Q2 IRA report, actually on the general insurance side there was there was no growth, there was flat growth. But most interesting thing was that there was significant reduction in personal accident and the motor book. But there was also, interestingly, the highest growth came from medical and aviation. So, and the net effect of that was a zero growth year on year based on half-year results for this year with the IRA report. But when you look at the life side actually grew by 8%, but for various reasons, especially purchase of annuities and that kind of thing, because of the massive withdrawals that are taking place after people are being laid off. So when we analyze this, we realize that on the general insurance side, if you look at the classes of insurance that are affected in a big way, are actually those ones that are affected by mobility. When there's cessation of movement, marine insurance, GIT, customs bonds, policies go down. When there's cessation of movement, also, a lot of motor vehicles are grounded and that kind of thing. Other policies that were really affected were, of course, on stock turnover, gross profit related policies, travel policies, money policies, and the rest. So the interesting thing is, from the general insurance side, we're seeing that, never mind COVID, if cessation of movement is not there, the impact will be much less. Now, when we look at the first wave, if we can call the first wave, where there was total lockdown, that's when everything came to a halt and there was such a heavy impact on the economy. But right now we are seeing better resilience, and with the recent announcement by the president that he actually did not stop movement within counties, we are feeling that the impact will be less. Also, the second wave obviously is seeing a higher rate of hospitalization, but whether that will translate into the American experience of whereby, never mind there's a great increase in infection rate, we're not seeing a corresponding increase in the death rate as it was in the first wave. So, by and large, what I'm seeing is that if we manage this second wave without having to lock down the economy, and with better treatment protocols and probably increased, health facilities, and with the possibility of a Q1 vaccination, gift, I think the view we've taken is that we will probably be better off than we were in the first wave globally. But when you come to Kenya, my fear is the first wave we were spared stress on our health facilities. This time we can see the stress, especially after the pandemic has moved to the counties. So how we manage, whereas the impact on the economy may not be as bad as it was in the first wave, we fear that on the health side, we may not be prepared for the number of hospitalization cases that are coming up. So we've taken a generally more positive view, because we have that much more experience than we had at the very beginning, and we don't think, if we manage to ride the wave, so to speak, as an industry to where we are today, as Gatonga said, it could have been worse. We've taken a cautiously optimistic position that it may not be as bad as it was in the beginning, but the worry is on the stretching and of our health facilities.
If you allow me to give the doctor actually a chance to comment on that, as a medical doctor, I think Sammy has done a really good job expounding on where the industry is today, giving some half-year statistics from IRA. But doctor, what are your thoughts? Do you agree, or do you have slightly differing views in terms of the second wave as well?
Yeah. So, Seth, I totally agree with Sammy. I have exactly the same view. Also, because when you look at it from a medical perspective, I would say that the second wave was not a surprise. The COVID, or a pandemic of this magnitude or of this nature, especially a pandemic that spreads because of contact or because of closeness of individuals, it's not unusual to see this kind of a pattern. At the end of it, it's a very behavior-based kind of trend that would expect to see. So if you look at what happened with the first wave, we had a number of hotspots, but the primary ones locally were Nairobi and Mombasa, and there was a lot of restriction of movements. I think the government took the right call in terms of restricting movement to make sure that there was no transmission between different areas of the country. After the lifting of a lot of the initial restrictions and allowing movement to happen, I think what we've seen was something that was definitely going to develop, just from the fact that people are going to interact more and more across counties. And I don't think it took long before the virus was in more remote areas than we had initially within the first phase. So from a medical perspective, it's a pattern that is more or less expected, and I think it's a pattern that had been by and large predicted as as the second wave, as it was and has been called. The ends of going into the future, I think a number of issues will play. One is we will still have the advantage of having a relatively young population. We're having a side conversation earlier with Sammy, and what we're saying is that the patterns are sort of becoming more and more consistent with what we are seeing or what we've seen in the rest of the most vulnerable people, populations above 55 to 60 years, those with underlying illnesses. We still have a few exceptions, but by and large, the trend is becoming clearer. And I think also from a risk modeling perspective, there's relatively sufficient data to help us figure out what is likely to happen in the future. But I think that that population dynamic in terms of demographics is still going to play to our advantage. I'm told the founding president of Kenya, Jomo Kenyatta, used to say that God lives in Africa. I don't think that has been more true than now. So I think that's one. Then the second thing also is we still have to continue building resilience in our economy, because that's what is going to drive growth of the insurance industry, but also the rest of the sectors. Being a service industry, we rely a lot on the production sector. So it's really important that measures are taken to make sure that economic productivity continues, whether it's in manufacturing, whether it's in and all that, because eventually that's what feeds us as the insurance space. So the issues of how we manage precautions, how we prevent transmission to make sure that the most vulnerable are not impacted, and that we have a health system that is where we are able to build up a bit more resilience to be able to accommodate those who require things like testing, but also provide a lot more education and awareness on how to prevent transmission and complications. I think we stand to maneuver the second wave and any other possible waves in a much better way compared to the first wave, if we take the learnings of what we have and use the data properly.
All right, thank you. So we are getting to the tail end of this conversation, and we cannot finish the conversation without talking about the future of insurance. What have we as insurance practitioners learned from this COVID pandemic? and what are some of the lessons that we have learned that we can take forward despite the difficult situation into the future. So I will start with the last question was actually to Patrick, to Sammy. So I'll ask Patrick to begin, and then Sammy will comment on the same as well.
So Seth, I think in terms of the future, I would say it's an opportunity for us to think how we do business, and also rethink about how to build resilience within businesses. When we run businesses or we operate in an environment like in a normal environment, I think we tend to sort of take the assumption that we live in a very linear space, and a lot of our risk modeling is based on that assumption. But I think history has taught us, and particularly this one, that there are shocks that are of catastrophic nature that will periodically come through, and those are shocks we sort of have to build our risk models around, and build also our business structures to be able to protect business continuity. So I think that's one of the biggest learnings in my view that comes out of this experience. The second thing is so there are many tragedies to a pandemic like this one. I think one of the key ones is really to continue being the same. So I think there's a sort of a huge call for a lot of businesses, including ours within the insurance space, to rethink how we do business, and take some of the learnings we've had from this pandemic. There are a number of things, but I think the key ones are issues around our operating models. How can we get more efficient? We've seen how to be more efficient within this space of COVID when everybody's trying to cut costs. If you think about the healthcare space, we've had a lot of things come up, things like telemedicine, and a lot of other innovations that have come forward to try and create continuity while making sure that there's minimal financial impact. I think those are things we need to build on and rethink our model. It's also taught us about how to really put human beings at the center of how we work, because at the end of the day, I think the bearing in mind that this is a health crisis, at the center of it is really human health. So I think it shows us how important it is to think about setting work environment in such a way that should there be any risk exposed to individuals within the business, then we have sufficient resilience mechanisms to be able to adapt. And one of those is the experience of working from home, which I'm sure a lot of businesses and sectors will be exploiting going forward in terms of how they can operate better. I think lastly for me, Seth, is the issue of digitization. I think we talk about it a lot in the insurance space, but I think this is a time to make more realistic than it has been in the past. Majorly because our customers demand it, and the pandemic has taught them to behave in a very specific digital way, which I think the rest of the industry players have to now ride along to become more and more relevant in the future, including even in how we develop products and roll them out to our target markets.
Correct. Sammy, you're a professional in this industry. We are very keen to hear your point of view in terms of, what does the future look like? Just adding on to what Dr. has just said.
Okay, Seth, can you hear me?
I can hear you loud and clear.
Yes, I was having a bit of a problem with my gadget here. So again, maybe just to say a few points with regards to how we are thinking about the future. I think this pandemic has brought out a position whereby I think the usefulness of insurance and the responsiveness of us as an industry to our clients and to the world in general out there is still being prosecuted right now. As an industry practitioner, it would be, I feel it is very bad, and especially as a client advocate, I think it's very bad if during the biggest time of need of business and people, an industry does not look like it actually came through for the general populace.
So as I said, it's still the effectiveness of our response is still being prosecuted out there. But generally speaking, one area that I feel that the future we have to have this big conversation is on the general insurance side, and especially on the consequential loss of business interaction policies. All our business interaction policies, at least in this market, are only related to material damage. So there are very few policies that we know of, even globally, that would actually respond to business interruption and consequential loss claims arising from a pandemic, because there's no material damage that has occurred. And a lot of litigation is out there, especially in the developed markets of the US and Europe, where there some clients are arguing that BI policies should have responded during this pandemic. So the general insurance industry did not come through for businesses at this hour of their need. And again, as a client advocate, as opposed to necessarily an underwriter, I think we should now start modeling. And this is actually a call to you as an organization, to the members of TASC, to actuaries, to start modeling and to start creating covers that can respond to, especially on the business interruption side, to pandemics, because businesses have been left without cover. There's been no response by us towards helping businesses recover from the consequential losses from this pandemic. By and large, I think health insurance has responded positively, albeit sometimes kind of pulling teeth. There's been mixed reactions in the markets, but I would generally say that health insurers have prosecuted themselves well during this pandemic. A leader being obviously Jubilee with Dr. Gatonga there. They've responded and paid for claims for COVID, even though some policies were excluding. So to a good measure, health insurance has responded positively. But still, a lot of modeling still needs to be done to ensure full coverage going forward. Life insurance, to me, has been the best responder, in the sense that very few policies, if any, we've come across, have excluded death from COVID from their life policies. And kudos to, again, to the actuaries who modeled life insurance policies in such a way that it can respond to business and to people during the hour of need. So a key plank of what I see for the future is modeling of policies to respond to such situations better going forward. If you can have insurance policies covering for hurricanes and serious earthquakes, I don't see why we could not be able to come up with business interruption policies that would take care of businesses and respond to BI claims and consequential loss claims. The other plank, or the other pillar of the future that is materially affected by this is the acceleration of tech. Those companies that were on a good and solid path on digital transformation, or were way up there in terms of digital transformation and automation, have ridden this wave better. They've had less disruption to their business. So this one, I don't know whether to call it a positive effect of COVID, is that businesses have been literally forced to accelerate their transformation into higher usage of technology. So again, as an industry, we are relying a lot on the future, on technology for the future, over and above operational efficiencies within our businesses. But even when it comes to how we model claims, like for example, again, I'd challenge those who model businesses. Next time Tesla brings us, say for example, driverless cars, what insurance policy will we have there? A car that does not have a driver, what is the insurance model that will respond to that? Have we started thinking about that kind of thing in terms of how tech assists us with claims management? That's a well discussed position, and so acceleration of technology is a must now. And I would urge that, or rather, I see a lot of conversations around how technology can come to improve on the kind of policies that we come up with, and also come up with absolutely new policies and new ways of doing things, and how businesses are also run, especially working from home and that kind of thing. The third one, I would say, in terms of the future, is business efficiency. Again, we've been forced into really thinking through our business models and whether we are running them efficiently. If you look at the issue of office real estate, many of us are wondering, or have actually seen, that we can do with probably 50-60% less of the real estate we have today. We don't need all that office space, maybe. Positive things about efficiency. We've been struggling with work-life balance issues when it comes to people, whereby we want to give them flexi time. Now, COVID has really taught us what flexi time means, in the sense that now there have been positives around that. So you find that we probably can do with about 20-30% less of the costs that we have taken for granted that we have to incur. So COVID has taught us that we have to change our business models for better business efficiency.
Yeah.
And there's a lot of fat that we have right now that we probably don't need. So there's much more, of course, I'd like to talk about this, but those are the three key areas, especially related to our industry, that I can see the future conversations revolving around.
Okay. Really good insights from industry leaders, and I'm very sure that our audience is itching to hear more and more from each of you. Sadly, we are drawing to a close, but not before getting your final points of insight. Given your time in the industry, the people listening are predominantly risk and actuarial professionals. Sammy, you've touched about some of the things they need to think about, modeling some of the risks and coming up with some of these policies. What are your parting shots each to the audience in terms of where the industry is going and how we can position ourselves as a profession of the future?
Okay. First, maybe just a quick description of what I do, as you had alluded earlier. So at Minet Kenya, I take care of three companies. There's the Minet Kenya Insurance Brokers Limited, that is actually the brokerage arm of our business that takes care of all lines of insurance, including insurance broking. So general insurance, employee benefits, and the like, all lines and all classes. Then we also do have Minet Kenya Financial Services Limited, that actually takes care of our pension administration business, and that is regulated by RBA. Then we also have now the Minet Kenya Consulting arm, under which our risk management and actuarial practices are domiciled, including wellness and other consulting lines that we normally put forward for our clients. So, in my experience, things are the level of disruption and the rate of change in our industry is extremely high, and especially in the insurance broking, more so from an intermediation point of view. And my advice to your members and to actuaries in general and risk managers is that your role is needed now more than ever, and will be needed more than ever going forward in some of the key areas. For survival of our business, and for any business survival now, with the level of disruption and with the level of rate of change in the markets that are taking place right now, clients' demands and that kind of thing, I think the business that will win in future is one is innovative. So when it comes to product development, we need to really be innovative. And then again, I always say, let's challenge each other. Like we do know our penetration rate is a paltry 2.7% right now, whereas I think the benchmark that we've all been looking for is 6%. And it's not for lack of trying. There are many companies, insurers, intermediators, who have tried to come up with products that can actually increase that, or at least have a dip into that blue ocean of the extra 3 or 4% market that is out there. Now, and one area, like just as an example on product development, is microinsurance. We know that we don't have adequate or good penetration in the micro space. Yep. And to me, it is because we probably we've not applied ourselves to model products that can be consumed by this large uninsured market,
Correct.
but profitably for the insurance industry. So the companies that will win in future are the ones that are going to get innovative, to take a dip into this blue ocean, literally, that is out there, that is not insured. And for me, it is innovation around product development and that kind of thing. The other thing is definitely the reason I describe the nature of our companies to underscore the need for diversification. Traditional, say for example, traditional broking, commission-based, business lines are actually shrinking because of price pressure, because of undercutting, because of client demands and that kind of thing. So the thing is, you've got to diversify into various, other risk-related areas in our industry, and that diversification can only come with proper, actuarial modeling, just as in product development.
Correct.
The only way we'll be able to do good product development is if actuaries are able to model for us winning solutions, and also model for us new lines when it comes to diversification. Because sticking to the few lines we are in right now, in the next 5 years, you will not survive.
Correct.
The other one is on business resilience, pricing, how we run our businesses. Look at this kind of disruption of COVID and that kind of thing, the effect of tech. So what I can tell you we've been suffering in this market is we've done a lot of thumb sucking in terms of what we come up with. We see a competitor coming up with a new product, we copy it. We use intuition more than science to be able to come up with business models and practices that are supposed to help our businesses. So more science is being called upon, and again, the actuary of the winning actuary or the actuary who will make more relevance to business is one who's able to see through these new emerging business needs and comes up with solutions for business. Business resilience, risk management, reduction of liabilities. That is a key, C-suite conversation that actuarial modeling can come to help us with. Then maybe lastly is about disruption. Again, your first question was, did we see this coming? That level of disruption, I can tell you, not many of us probably had planned for it. Trump, I think, is probably as big as a disruptor as COVID. Who saw Trump coming? And you can see how he's disrupted the world with regards to even coming out of WHO, Paris Climate Agreement, and that kind of thing. And yet he's doing also some other great things that are delivering to his people, some negative things. So what the level of disruption that is available, even from the changing laws, the changing regulations, and that kind of thing, it is such a big topic for us that we need more science to be applied to our business modeling to manage the kind of disruptions that are coming. So for me, what I'd advise is actuaries to now think beyond what we have known and come up with solutions that will allow us manage the future in those 4 key areas. And you will be a winner if you orient yourself like that.
Thank you very much. Thank you very much. Very useful comments, Sammy, and very, very welcome comments from the CEO of Minet. Daktari, parting shot to our actuaries. About 2 minutes on the clock, and then we finish.
Yeah, thank you, Seth. I'll just add on to what Sammy has said and perhaps underscore a lot of what he said, particularly in terms of the actuarial field being a data science field. I strongly think the future of our industry relies a lot on using that science, particularly using understanding data. When you look at the pandemic, how we navigate the pandemic relies a lot also on how we pick patterns from the data that we are seeing. And I think the growth of the industry, as we know, it's a very small industry by any standards. We are among the smallest sectors of the economy, yet the potential is so huge that it's almost unimaginable if you think about it. But we've continued to concentrate on a very small piece of the pie and leaving a big part of it and competing on a small field while there's a much bigger field around us. The trick to growing the industry will be in how we use our data and how we try and use that data to develop more relevant solutions, which is where I see the actuaries being very useful to the industry. I don't think there are any other professionals in the industry that understand data better than actuaries. And therefore, they sit at the center of developing these solutions. So my parting shot and challenge is to really throw this challenge back to task, particularly to look at how to develop more tailored and local solutions and solutions that formalize risk management. We have a lot of risk management in the country that is very informal, in form of chamas, in form of harambes, in form of even the church. We often see people giving money to get to protect themselves from a certain risk. So we as a society have to develop our own informal ways of managing risk. But by understanding the behaviors that we have locally, a lot more, in a lot more detailed way, and being very creative around coming up with really innovating solutions, not just copy pasting what the West is doing. I think actuaries, can give a lot to this industry and contribute enormously to its growth.
Sammy, Patrick, on behalf of the Actuarial Society of Kenya, and on behalf of the Council of Task, and on behalf of the actuaries listening in, thank you for your time, and thank you for your insights, which are well received and much appreciated. Ladies and gentlemen, unfortunately, we've come to the end of the session. We've really enjoyed your time. We really appreciate you spending time in the middle of the day on this second day of the Actuarial Convention. We wish you well in the other deliberations. We've heard a lot about what is going on in our industry, and we will be counting on you as professionals to take this industry to the next level. My name is Seth Chengo, an actuary in Zamara. I've been your host. Thank you for watching.
Thank you, Seth.
Thank you.